Good morning. This is Japanese Economic Review Channel. Today is April 14th, 2026. We begin by reviewing yesterday's market intelligence from Monday, April 13th. It was a day of stark contrasts, where intensifying geopolitical risks in the Middle East clashed with the resilience of global technology growth. Yesterday's session provided critical insights into how macro signals are currently driving market volatility and corporate strategy. Looking back at yesterday, the market was caught between two opposing forces. In the Middle East, stalled US-Iran peace talks and threats of a blockade in the Strait of Hormuz triggered a spike in oil prices, creating acute inflationary fears in Tokyo. Conversely, the US provided a silver lining. March CPI printed at 3.3%, beating the 3.4% consensus. This cooled inflation fears and triggered a targeted rally in global tech and semiconductor equities. Yesterday's decline in the Nikkei 225 followed a clear logic of causality. Diplomatic gridlock led to a strategic choke point, causing NY crude oil futures to surge in after-hours trading. This sparked an inflation alert among Japanese investors. As a result, the Nikkei plunged to an intraday low of 56,232 by 1307, before institutional dip buying stabilized the close at 56,502, down 421 points from the previous Friday. Let's review the hard data from yesterday's close. The Nikkei 225 fell 421 points, while the Topix dropped 16 points. In the US, we saw a distinct split. The NY Dow fell 269 points, but the Nasdaq rose 80 points, marking its 8th consecutive day of gains. In the currency markets, the yen remained weak, with the USD JPY trading at 159.63 by late afternoon, further complicating the domestic inflation outlook. The divergence in the US market yesterday was particularly striking. While the Dow Jones struggled due to geopolitical hesitation, the CPI relief catalyzed heavy buying in high-weight tech names. Semiconductor leaders such as AMD, Nvidia, and ASML remained firm. This suggests that the appetite for AI and advanced technology continues to be a dominant market force, providing a buffer against broader macro uncertainty. Yesterday's sector performance in Japan saw 26 sectors decline while only 7 advanced. Energy-sensitive sectors like rubber products, Yokohama Rubber, and air transport, JAL, ANA, faced significant headwinds due to rising oil costs. However, we saw notable resilience in domestic retail, with JIN's HD and Kotobuki spirits managing to advance, proving that specific domestic catalysts can still drive growth in a down market. Market activity yesterday was robust, with the prime market seeing a trading value of 7.25 trillion yen. Despite decliners outnumbering advancers, the growth market exhibited, quote, selective buying. Firms like Terra Drone and Value HD saw gains, indicating that capital is actively seeking companies with concrete, high-growth narratives, even when the broader index is under pressure. Finally, yesterday proved that underlying corporate execution persists despite market swings. Mamezu launched an upgraded AI engine, and Junior East debuted online clinic booths. Notably, Canro is releasing new Puchi Munyoru gummies nationwide starting today, April 14th. These actions, from M&A in Southeast Asia by Sankyu to new product rollouts, remind us that long-term value creation remains the core focus for leading enterprises. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.